Welcome back to the Accommodation Show. This week, I am joined by the wonderful Bill Faeth. Bill Faeth comes from Build Short-Term Rental Wealth. It's an awesome company that will help you build your wealth through short-term rentals. Look, Bill, welcome to the show.
Thanks for having me, Bart. I'm excited to be here and talk some shop with you today.
Yeah, look, and I've been looking forward to talking to you for quite a while. I know that we connected roughly about a year and a half ago, but we never managed to take that any further. Now, our circles are converging with the people that we know, the people that we talk to. And what I love about the community that we have is that we like to share and we like to help each other with our businesses and help the general population or people out there get better with their businesses. And I guess the industry that we've decided to focus on is accommodation, hospitality, and short-term rentals. I would love you to introduce yourself, let everybody know who you are, where you're from, and how you fit into this world that we live in.
Yeah, I appreciate that. My name is Bill Faeth. I currently live in Nashville, Tennessee. I'm a born-again redneck. Moved here 18 years ago from Southern California. Ex-golf professional, have done 32 startups, all bootstraps, never have taken a dime from an investor. Married, I'm a huge lover of wine, being outdoors, and have two lovely daughters. I got into short-term rentals when I exited the long-term rental space. I've done industrial, I've done commercial, residential. Kind of started my first year when I played professional golf. I bought my first duplex in Bakersfield, California, 21 years ago. So in 2015, and it's kind of funny because I was battling Uber from a regulatory standpoint when I had a ground transportation company when Uber came onto the scene in 2012, 13, 14. So I was in city council meetings every single Tuesday for 2 years, Bart. And you know what was happening in Nashville, Tennessee? It was the most volatile short-term rental city in the country at that time. Like every other week there was a new bill being passed. And that's how I found out about short-term rentals. I'd never heard about it. I wasn't even a vacation rental guy personally at that time. So I called a friend of mine in Destin, Florida, who owned a huge resort. He had built condos. He owns over 100 STRs today, has a management company with over 400. Started talking to him about it. And he said, you know what, don't invest here if you're going to buy something. Go to Gulf Shores, Alabama, a little bit farther down the panhandle. That's what I did. Me and my wife flew down 2 weeks later. Found a spot for like $635,000. We bought it. We were off and running. And that's how we got into the space.
Yeah, awesome. So, and look, this space is an ever-growing space, right? There's just so much going on, so many opportunities that are to be had, but also a lot of lessons that people have learned along the way that we can help people with through this episode and that sort of thing. I must ask before we get going. You said that you love your wines. Have you tried much Aussie wine, and are you a red or a white?
I am definitely a red. I'm not a big fan of whites. I have had some good Shiraz from down in Australia. I am much more of a big, bolder, kind of oaky type of California Cab and then some French Bordeaux. But recently, after my wife and I went to Italy, I've gotten into some really kind of big and dry Barolos and Super Tuscans. But if you're a wine guy, I mean, if you drink any California Cabs, Harlan, Fantasca, Scarecrow, kind of these, boutique kind of big wines is really what I'm into primarily. And it just so happens right next to my studio here is my wine cellar.
I'm quite partial to a bit of a Chardonnay myself, kind of that. I feel that Chardonnay went super old school and now it's kind of having a resurgence and it's not overly oaky, but I do like a good Californian Chardonnay at the moment, which I'm drinking, which I'm really enjoying. So, I'm more of a white guy. But look, getting into today's topic.
Wait, hold on. We can't talk wine during the whole episode. We got to talk about something else?
That's it, yeah. Well, look, you get me onto all the alcohols at that stage. We'll go into our bourbons and then we'll go into the beers and we're sunk. Look, I mean, that's the nice thing about being in hospitality in the world that we live in. Like, a lot of our clients actually are vineyards, so we get to go out and see them, so we're very lucky. But, right, onto the topic for today. So I've been thinking about what to talk to you about because you have a breadth of experience and particularly in growing wealth and understanding industries and how to leverage them, how to create the right networks to grow your business and to do better in it. What I think is a good topic is to talk about now, 2022. So you've talked about in the past that you've grown lots of startups and you've got to this to the space where you're right now. And I know that within the short-term rental space, there's so many different opportunities that are to be had. So you could get into the service side, you could get into the technology side, or you could get into the operational side of running a property management business. Now, I know that you have a particular business model that you follow. So I would love to first discuss with you the way that you build wealth within short-term rentals. But I think that would lead itself really well into what are the opportunities of 2022 that may not have been there in the past, and what are our risks moving forward and things that we should consider as we move forward and be really realistic about this, because this space is not the same as what it was 2 years ago. And it's going to keep on changing. We need to stay on the front foot if we want to be successful. So, how about you kick us off with where you fit into how we get into short-term rentals?
Yeah, so I mean, I'm the guy that's in the luxury space. I mean, I'm in the very, not the very high end, but I'm in a little bit higher end than most. I've never spent more than $1 million on a property, and I started in that $600,000 range, kind of $400,000 to $700,000. But I'm buying, I'm not renting, I'm not arbitraging, I'm purchasing, and I started in markets that I can build appreciation in. So I believe that right now, real estate and specifically short-term rentals, because of the return, the cash-on-cash return, the net income, the EBITDA, whatever, however you're measuring, the cash flow out of that. It's the best asset class of our lifetime that we've been able to invest into, not only because of the cash flow, but because of the appreciation. And that's really taking the mantra from 2015 to 2019. 2020, 21, it's an aberration. It's something we will never see again in our lifetime, in my opinion, right? So I invest into appreciating assets in emerging markets. I don't own in Gatlinburg. I don't own in Destin. I don't own in Broken Bow. When everybody's going one direction, I find the emerging alternative market. And that's how I can get in at 30 to 40% less than the people that are overpaying. So when investors are there and we see people talking about it on Clubhouse, on Facebook, go to the Smoky Mountains, go to wherever, that's where I say, you know what? I'm going in a completely different direction. So I do my own evaluation, I do my own research, and I still to this day, I look all over the US. I'm not investing in one market. I'm not investing internationally. I look at about 6 markets every morning between 5 a.m. and 7 a.m. And those markets change and they fluctuate. I'm under contract now in a brand new emerging market that's literally been, it's like your eyes wide shut. It's been a vacation rental market for almost 40 years, but the investors have not ruined it yet, right? So I'm keeping it kind of close to my vest until I can lay my roots. Then I'll talk about it publicly. And the difference between me and some other people is I don't have a dog in that fight. So I'm not a real estate broker selling real estate, but I want to get my investment in because I know if, just like with you or any of us that are influencers, if we say something about a market, then people will follow. So appreciating assets, emerging markets, diversification within our geographical component of our portfolio, I think is really, really important. So I own quite a few properties down on the Gulf Coast of Alabama. Well, what happens when a hurricane comes like it did in September of 2020? If I have all my assets in that one market, boom, Hurricane Sally. I had a really good friend that had 5 properties. He was 2 years from retirement. He was a professor at the University of Virginia. Sally came in, he lost every property. That set him back almost 5 to 6 years, even though we have loss of income. The deductible is so high. So I'm in Arizona, I'm in Colorado, I'm at the beach, I'm in the mountains. I've diversified for a multitude of things, politically, to natural disasters, and also different appreciation. But things that I think people don't think about is the cash flow. So I've now got a winter market that offsets, with ski resorts and cash flow that's strong in December, January, February, where my beach markets, that's a slower time of the year. So I'm thinking cash flow, I'm thinking long-term investment, because I'm thinking exit strategy when I purchase, because I'm looking at every single purchase as a standalone business. P&Ls, balance sheets, forecasting, and I think too many people just look at it as I'm buying a property and then I'm going to rent it, and they don't think about all those business components.
Yeah, look. Yeah, look. I think that's fascinating because what I love about this show is there's such differing opinion about the best way to do things, and because you've got obviously whether you work in one territory or multiple territories, right? And there are advantages of working in one territory. You know the area. You've got scaling economies. You're definitely going to be more profitable because, especially if you're trying to scale, because you've got everything locally. However, in terms of risk, you've got a much higher risk profile that if things go wrong, you've got all your eggs in one basket, so to speak.
Look at when COVID hit, Bart, you think about Stay Alfred. Have you ever heard of Stay Alfred before?
I have not.
Yeah,
no.
Exactly, because they were out of business within 30 days. They had over 1,000 doors, 1,000. They had 4 locations in Nashville, 2 or 3 in Miami, 2 or 3 in Austin. They were arbitrage, and they were gone because they didn't have enough retained earnings. So they wouldn't have made it probably through the entire deal with COVID. But I mean, if you're gone in 30 days, you aren't practicing sound. You don't have a sound balance sheet, right? You don't have enough retained earnings. And that's the thing that I want to educate people on, is let them know you've got to treat this with the fundamentals of a business. Because we've been like this, I mean, hockey stick on that graph in 20 and 20, 21, 22. You asked a question about, I think, the biggest risk and the biggest opportunities happening right now, Bart. And it's happening in the Ukraine, and how Russia and the Ukraine is affecting at least our economy right now. Inflation was already at an all-time high. Now it's going higher. Interest rates have actually come back down. Gas is over. We might hit $150 a barrel in gas. We're not. We should be oil independent. We're not. We're buying from Russia. All of those things are going to impact the vacation rental market because discretionary income is going away, right?
Correct.
So that means we've got to be better at our evaluation process. We've got to be better at our marketing. We definitely need to know how to direct book, right? We need to drive our own traffic. And we're going to have to understand positioning, and it all starts with our investing. But at the end of the day, if gas hits $6 a gallon, which it could here in the States, at least where I live in Nashville, it's about $4 a gallon. I think it's pushing $6 in California. Then the security of the historically investing into drive-in vacation rental markets is going to be challenged. And you're going to see Disney and Orlando and all these traditional places are going to struggle because people, they may have the income, but they're going to hold it tighter to their vest. But I also see that as the opportunity for people that have cash, when people want a fire sale, to be able to go in and buy properties back at maybe 2020, 20-30% discounts from where they're at right now, if it becomes prolonged. Does that make sense? So
I love you. So yesterday I did a bit of a survey to my closest community, just saying, where is everybody investing at the moment? Now, of course, there's the short-term rental space, but then you've got stocks, and then you've got cryptocurrency, and you've got all these different places where you can put your money. A lot of people are saying, gold and copper and oil and all this sort of stuff. It's clear that things are going to change. And one of the things that a friend of mine, we got into a big discussion yesterday, was he said, keep the cash, wait for it to tank out, and then go again. Now, this is all opinion-based stuff, right? Just for anyone that's listening, it's very important that you don't take this and make decisions that are going to affect you in your personal circumstance, because we just don't know. But is now a good time to start putting money into property and to go down this space, or is it like hold fire for a bit, see what happens, and then make some decisions? Or is it a mixed approach? What would you say, like if you're talking to me and say, hey Bart, this is what I would do?
I would tell you what I'm doing, Bart, and I would give you context as to why and how. So I think it's reckless for us. I'm in an online educator position, right? And so I've got 20,000 people in my Facebook group, and I get asked that question every day. And I say, here's what I would do, kind of practicing Gestalt, right? I'm going to give you a personal experience share as opposed to give you advice, because I don't know enough about your long-term goals, your family goals, your retirement goals, your cash on hand, your cash flow. That's what I have a problem with about people literally making financially driven decisions for their future by watching a podcast like this, or in a Facebook group they post, hey, where's the best market to invest in? Should I hold on to my cash? Should I be deploying? Now, for me personally, I believe the safest place that I can deploy my cash, even still today, is into real estate. So I do not invest into a property, period. Doesn't matter if it's anything. Could be a condo, could be a multifamily, could be a boutique hotel, could be a single family residence. If I can't do 30% cash on cash return, I'm not pulling the trigger. And I'm under contract right now, about halfway through to close, in the largest purchase that I've ever made, $1.6 million. But I'm looking at 32% cash on cash return on a $300,000 to $325,000 a year gross rent property. So if I do take a 15% hit, I'm still okay. I still have a 15% cash on cash. Now, I would never make an investment up front on 15% cash on cash, because there's way too many good deals out there. That's why I invest in those emerging markets. But that gives me the cushion to where if something does, you know what, hits the fan, the market does have a huge correction, to where I can still be profitable.
Well, can you break down what you mean by cash on cash for those that kind of got lost in the numbers?
Yeah. So cash on cash return, the way that I view it, and there's all these different views within our industry, is I'm just going to say, if I buy a $500,000 property, I put 20% down, that's $100,000. I'm probably going to have about $10,000 in typical closing costs that would go along with that. So I put that $10,000 on top of that $100,000, I'm at $110,000. Now I need to do $20,000 in paint, couches, new furnishings, new dishware, all that type of stuff. So I'm add that 20 on top of the 110, I'm at 130. So that would mean I have $130,000 down payment, closing, furnishings to basically activate my listing and start taking rental income. So I want to get that back in less than 3 years. I need a 30% cash on cash return. So for me to get $130,000 back in less than 3 years, I need to do $45,000 roughly net income, not rental income, net. So I would probably need to be doing 120,000, whatever, depending on how your financing is, or some variables here. But let's just say if I do 100,000, I got a $3,000 a month mortgage, cleaning fees, insurance. You factor in all your expenses, and if that comes out to be $55,000 in cost on $100,000 in revenue, I net $45,000. 45,000 times 3 is going to hit that $130,000 cash mark. I get my cash back in 3 years. Now you know what I do with that cash? I deploy it again. Okay. So I see a lot of people going way too fast. They're, dipping into their self-directed, IRAs and selling stocks and taking 20%, 30% tax hits. That's not what I'm talking about. I started with $126,000 in 2015, almost 2 years before I bought property number 2. I believe purchasing property number 2 is the hardest. Unless you're going out and raising capital and, getting investors, that's a different story. But I bootstrapped and used my own funds. I didn't start with $10 million and just start buying up properties to get my portfolio to where it is. Shit, Bart, last year I bought 8 properties last year. I flipped 4 of them so I could level up, right? Just to generate more cash to where I could level up. So I think it's really important that we know how to manage cash. We understand that we can take it slow. You don't need to go liquidate all of your assets and put them into short-term rentals today. And I'm also a big guy about doing at least 20%. I'm not the 10% down guy, because I want to have that cushion. I'm looking for security. I like the Warren Buffett methodology, right? Of buy and hold and just, have some intention with what we're doing. And I'm 48 years old. I'm looking to the end game of when I'm 60. I'm not looking for that quick buck. right now in 2022. So I've got a life plan and a business plan to get to May 11th of 2032, and every decision I make today will impact where I'm at on that date.
Yeah, and look, there's so much value in this, and because we do talk to property managers, we do talk to investors that are buying their assets, and as you've said, it's a lot slower, but there's advantages to that business model where you can get the capital growth from the property as well, as long as you do get that capital growth. Now, and then the last part of it as well is understanding your numbers, and the most important thing for everyone to learn is know your numbers. There's so many resources for it. If you're going to do any of these courses, learn about the number side of it, then everything else gets easier, because the numbers can't be biased, or they can, but the numbers don't lie, is what I'm trying to say. I don't want to focus on that particular part today, but I'd like to talk to you about if we're keeping focusing on now, right? Because now is such a precarious time. And one of the things that you mentioned was emerging markets and investing in something that someone else hasn't touched. And of course, you're saying I don't want to share all of my best stuff, and that's something else for everyone else to learn. If someone's saying that it's hot, it's a little bit too late, like Bitcoin and things like that. You want to be in before people start talking about it. I'm
going to give you an emerging market.
It was great.
In the US. Everybody wants to go into Destin, Panama City, or 30A, to Rosemary. We hear that all the time, at least here in the States, right? That's like the prime Gulf of Mexico, area to go into. Then the second market is really where I'm at, Gulf Shores, Orange Beach, right? Well, both of those markets are very, very expensive today, very challenging unless you have really good relationships and find something off market or wholesale it, that you're probably not going to be able to find something today to get a 30% cash on cash return. So you have Destin, then you have Panama City Beach, then you have Mexico Beach, then past that is Port St. Joe and Cape San Blas. So 2 weeks ago, I put a property under contract for a client. And when I say a client, this is a gentleman that's hired me to find the property for him. Then I would actually manage it for him or co-host for him once we procured the property. 4 months I looked, 4 months. And you know what I found? After 4 months, and most people would say, I need it in 30 days. You don't. You need to find the right deal. His first deal is the most important deal. Beachfront. I want to make that abundantly clear. Beachfront, 3-bedroom, 2-bath for $655,000 in Cape San Blas. It's a unicorn. And if I would have presented the first 2 or 3 properties that I found one in Naples, one in Amelia Island, one in Apollo Beach just south of Tampa, I wouldn't have found this property. Those were all in the $800,000, $900,000 range, and they weren't beachfront. But I was patient. I'm doing my due diligence and looking every single day. And when this one popped up, I called him. I said, Michael, it was like 4:45 a.m. my time. He lives on the East Coast, 5:45. I called him. I didn't even text. I said, get your ass out of bed. Call my agent. Put this under contract, full price, right now. If she says go 25, 50,000 over, do it. Do double the earn. If she tells you 10 grand earnest, let's do 20. And so he did it. We got it at asking price at 655, 20,000 earnest, and now he's got a beachfront 3-2, which is like 2017 pricing. In Cape San Blas, you can't do that in Destin. You can't do that in Gulf Shores. You can't do it in Naples or Fort Myers. It just doesn't exist. So when I run the numbers, and here's what you got to understand. AirDNA was showing about $112,000 in revenue on this property. Well, I've used AirDNA enough to know that the way that I do things, decor, listing optimization, pricing optimization, and probably most importantly, off-platform marketing, that I can outperform by 45 to 55%. So I know that I can do 175 to 185 for him on this property. That means that even including my fees that he's going to pay me, he can still get a 20% return. 20% return after paying me. And my goal is for him to fire me, take my 20%, he can make 40%. That is a very strong return that he would not have gotten if I didn't take my time and I wasn't patient to find that right place in Cape San Blas. The same things are in St. Joe. But it's not, nobody's talking about those because they're not the sexy markets. I look at, the Gatlinburg, the Smoky Mountains area. Everybody over the last 2 or 3 years have bought up Blue Ridge. North Georgia, there's Blue Ridge, Georgia. So it's the same thing. If you look in Auckland or Australia or Brisbane, there's all these secondary markets that might be 20 miles away, 30 miles away. And that's where I invest. Every single market that I'm invested into, with the exception of a lake that's about 45 minutes north of Birmingham, Alabama, everything is in a secondary market. And I average getting in about 35 to 40% less than I would in the primary market, and I can still yield the same amount of rent factor that I would get if I did invest into the primary market. That's kind of my secret sauce.
Yeah, and to me, from that whole story, the one thing it comes down to is that research part, and definitely mark those words that your first investment is absolutely crucial. If you get it wrong, then it's nigh on impossible for you to get out of that hole and then go again and leverage the asset and pull liquidity out of it to then go again, or whatever kind of structure you want to put together at that stage. But that first one's important. Finding unique properties as well is something that's important. But finding that deal. So just to give you context, the folks that are doing this really well have staff members going out there and just spending time trying to find deals. That's all it is. That's all they do all day long, is sit there trying to find opportunities to be able to invest in. So it is like trying to find a needle in a haystack. But you've got to keep on looking, and if it doesn't, you'll know when you know. But up until that point, make sure that you persevere.
Yeah, and I think Bart's right. A lot of the bigger companies do have people that are boots on the ground looking for those types of properties. I'll just share with you guys real quick. I'm a business of one. I don't have any staff, no VAs, no nothing. I do it all. I own 10 properties right now, or 9 properties. I have 1 under contract. I manage 8, so 17 properties, soon to be 18. I do it all by myself in less than probably about 10 hours a week. But the one thing that's non-negotiable for me is at least 1 hour to 90 minutes every couple of days to look at that evaluation and the new listings. And I spend more time when I'm really honing in to make an investment on a market. But if you look at the management side and you look at the evaluation side, I think the evaluation side is the most important. As Bart said, you got to get it right. Not just the first time, you got to get it right every time. Because unless you're independently wealthy, it's very hard to recover if you're going to take a $20, $30, $40, $50,000 loss. And you can do that by following the herd and not knowing how to do your research. So the number one tip I would give to anybody that's watching this, don't care about your skill level. You look at like Bart and I, we can do marketing that nobody else can do to drive direct bookings and that type of stuff. But learn how to evaluate properties on your own. Do not trust your agent. Don't trust social media. Figure out how to build out your own pro forma and forecast so you have a really good idea, and always underestimate your revenue by 10% and overestimate your expenses by 10%. Then you have a 20% delta in the middle, which is your margin for error.
Yeah, and look, getting a qualified, financial planner to come in and help you with this stuff and build some life goals as well is super useful for this. When you're doing your research as well, then we talked about the fact that there's different business models for short-term rentals that you can approach. So do your research on those. See what's going to fit your lifestyle. See what the risks are, what the benefits are to getting involved in it. But it's a lot of work. You've got to take it seriously. But look, Bill, I'm having a look at the clock and I'm seeing that we've already kind of overstepped our time together. I do like to try to keep our episodes concise and short, so that we get people to come back the following week and get some more tips from other people. First off, I want to say thank you for joining us, for taking the time with me, taking the time with our audience and sharing your thoughts and your views. I do know that you have a little bit of a plug, which I would love you to pitch, because you will be with all of our friends in a conference soon, but I'll let you do the introduction.
Bart, first and foremost, thanks for having me. This has been a lot of fun, and I'm very grateful, and I appreciate it. The STR Wealth Conference, the first one in the history. It's going to be the largest host-focused conference in the United States for the year. It's going to be electric. We have the world-famous $1 million host from Down Under. Julie George is going to be joining us. We have a 2-day lineup in a music venue in downtown Nashville. It's going to be electric. We'll have 1,000 hosts. We've got some major sponsors that are going to be there. It's all going to be host-centric, and it's going to cover really all 4 pillars of the opportunities that we all have in the short-term rental space, or at least the 4 fundamental pillars of owning, appreciating assets like what I invest into. And I'm going to teach you how I build wealth and how you can do it as well. But you've got Julie George and some other great people that, built great companies in managing as well. And then you got Michael Sjogren and a couple of other speakers that are going to talk about the co-hosting side and how you can penetrate that literally with no cash. We've got TJ Tajani and potentially another powerhouse, inside the arbitrage space as well. So it's not singular. This is all happening June 6th through the 8th. You can go to STR Wealth, that's WEALTH conference.com, strwealthconference.com. Tickets will be on sale by the time you see this. We've tried to keep it very affordable. We're going to have 1,000 hosts, 12 keynote speakers over 3 days, and a kick-ass opening party with some mega country stars that are going to be here because it's actually the CMA Music Festival right behind us. So we're going to have some big talent at the show. Michael Sjogren from STR Secrets and myself, we're the founders of the conference. We're putting our own hard-earned money behind this. I will make you one guarantee. It will be the most exciting, electric atmosphere and the best education you'll see at any conference that you choose this year.
That's awesome. I want to see you and Michael on stage singing along.
I'm not singing. I'm leaving that to Julie. Julie's coming to do the karaoke. That's what she's told us.
Beautiful. Look, folks, links to the event will be in the show notes, and also ways that you can reach out to Bill and hit him up for any questions and that sort of thing. If you enjoy the content that we're making, then make sure that you give us a like, a subscribe. We appreciate the support, and it enables us to continue bringing you awesome content and awesome guest speakers like Bill. Bill, thank you so much for joining us. I really do appreciate it. And I'm so sure we're going to talk again.
Thank you very much.